Good morning, Bowtie Nation. Joseph Hogue here, and folks, I gotta tell you, I am tired. The market has been a roller coaster this year, and August could be all that times 10. Not only do we have inflation starting to head higher, potentially hitting consumers and any hope for a Fed rate cut, but we've also got the tariff deadline, with Trump saying there will be no more extensions, and threatening upwards of 30 and 40% rates. So all this is setting us up for an enormous amount of risk, but if there's one thing I've learned in 20 years investing and over a decade as an analyst, is you do not want to be fighting the market upside, that you always want to have some money in stocks as they move higher. But then I feel where you're at. Sometimes you just get tired of all that craziness, the roller coaster ups and downs that take you to those manic heights, only to drop you into those depressive lows with the next stock. And we have definitely had our share of that here on the channel. While shares of ETH are up 49% since recommending it less than a month ago on June 30th, and Symbiotic has rocketed up 123% since going all in during the April sell-off. Others like Fiserv have horrible earnings reports and tumbled 20% since talking about it last month. So for my August stocks to buy, to save your sanity and your money, I'm buying 5 stocks that are going to win in any scenario. 5 stocks with the fundamentals and the long-term growth themes to take them higher no matter what. Now, I'm not guaranteeing they triple your money in a year like SoFi Technologies has for us, but up or down over the next month, you can have the confidence that these stocks are going to be strong, long-term investments. And let's get started with one that has fallen lately but fits in perfectly here. Shares of that Fiserv, ticker FI, down 17% on its second quarter earnings report. I highlighted earlier in the month the coming boom in tokenization and stablecoins when the Senate passed its Genius Act, now signed by President Trump. And everyone from JP Morgan to Walmart and Robinhood are getting in on this shift. Folks, stablecoins are going to happen, if nothing else because the government needs them to buy those trillions of dollars in U.S. Treasury bonds required by the Genius Act and to lower the cost on government debt. This is going to be a $4 trillion market, and every investor needs to be ready. Fiserv announced last month a plan to launch its own stablecoin and a platform for clients, and versus newbie Circle, Fiserv has the reach and the connections to dominate this space. The company is a fintech powerhouse, processing trillions of dollars in payments, digital banking, and services for more than 10,000 institutions and millions of retailers. Fiserv is in the background of nearly every financial transaction you make. We're already hearing that Fiserv's platform is going to be compatible with other stablecoins, working with companies like Walmart and Amazon that have already said they're going to be building their own coins as well, and it will allow an instant connection across the company's network. So here, folks, you have that rare time when a legacy powerhouse is actively embracing technological change, and the combination of Fiserv's established connections with this new platform means it is right here where we're going to see that stablecoin go mainstream. Now I'm going to show you why the shares fell last week, but even in that earnings announcement, management affirmed its 10% growth target for the year, growth which the market is still discounting with just 9% analyst estimates. And here, beyond that growth, Fiserv is a cash flow machine, converting more than 30% of its sales into operating profits. That is more than 3 times the margin at Circle. That drop last week came on slower payment volume growth on its Clover platform, but the company stuck with its 10% revenue growth target for this year, its 40th consecutive year of double-digit growth, and as high as $10.30 in earnings. And that 10% revenue growth, which again the market is still underestimating, would take it to $21 billion in sales and mean the stock is now trading at just 3.7 times on a price-to-sales basis. Here you see that is a 45% discount to the average 6.7 times valuation the stock is traded at, meaning that the shares could jump almost 50% and still not be expensive. Nation, you don't just lose 40 years of double-digit growth and that strong profitability, so even without the stablecoin initiative, Fiserv presents a great value opportunity that's going to perform in any market while we wait for the stablecoins to take the growth even higher. So we're just getting started on our stocks to buy list, but Nation, I want to take investing back to you. I think we've focused so long on the stock list and trying to beat the market that we've forgotten what it's really all about, that investing is about you and your goals. Now, part of this is just the YouTube beast, but it's also my fault as well, so I'm changing it right here. For the first time ever, I'm offering one-on-one portfolio reviews to all you out there in the Bowtie Nation. And this is going to be part of a research project I'm doing to understand investor behaviors and better help you invest. If you're interested, use the link I'll leave in the description to learn more. On that page, you're going to share your investments you've bought and sold over the last 3 years, along with your goals and your risk tolerance. With that, we're going to be able to see if your actual investments match your goals, if you're selling too early or too late. I'm then going to personally review your investing strategy, highlighting risks and opportunities, and give you actionable suggestions to align with your goals. Folks, I am not selling anything, and I won't try to when we talk. I'm going to be using this data to research investor behavior, so you'll also be helping out others, but I will never share your data or your name with anyone. This is going to be a big project, so spots are limited. If you want in, look for that link below and get your free one-on-one. Back to our list, and few themes are as certain as defense spending, with leader RTX Corporation, ticker RTX, set to benefit. Now in June, I argued that RTX was the best position for a fight with Iran. That's because Iran's strength is in its ballistic and cruise missile stockpiles, so any U.S. involvement will immediately trigger demand for missile defense systems, of which RTX specializes. The company makes the Patriot system and NASAMS and is a key developer in the THAAD system with Lockheed Martin. Gulf allies like Saudi Arabia, the UAE, and Qatar are all major customers of RTX as well and would be renewing their contracts. And here, even with tensions de-escalating between the U.S. and Iran, defense spending was about the only thing to be increased in this year's budget bill and one of the few issues with bipartisan support. It's not just Iran here, but North Korea and pretty much everywhere. We're seeing greater use of missile technology, which means RTX and its anti-missile systems is going to be key. And while Lockheed Martin saw its shares tumble on earnings and a $1.7 billion charge across classified, helicopter, and fighter jet programs, RTX got a boost when it reported 9% overall growth and surprisingly strong 16% growth in its commercial aftermarket segment. The company's order backlog increased to $236 billion, almost 3 times the amount it books in total annual revenue, helping to increase its full-year outlook. Now, against this safety and upside, I don't want you to think that RTX is the kind of stock that's going to make you rich. Even in an upgrade to the 6% forecasted sales growth, we're still only looking at single-digit revenue growth this year and next. And the valuation has crept up with the shares to a price of 2.4 times its sales, so you're probably looking at maybe 10 to 15% annual return on this one. But it's stable and a stock that you won't have to worry about. And here's another stock that took a giant dump on earnings last week, but with strong, long-term conviction. Solar maker Enphase Energy, ticker ENPH. Now, I've been highlighting Enphase as one of the few solar companies with the cash flow and the financial health to survive a very tough environment. From competition with cheap Chinese imports to the end of stimulus and government policies, renewable energy and especially solar is facing an existential crisis. But folks, we are going to need more than just oil and gas in our energy mix. Electricity demand is surging from the AI data center buildout, with commercial power demand forecast to double in some regions and grow at 3 times the rate we've seen over the last decade. Now, against that sell-off, Enphase is still forecast to grow revenue by almost 10% this year to almost $1.5 billion and to improve earnings by 13% to $2.68 a share. And more importantly, the company is strongly cash flow positive, generating almost $500 million in free cash flow over the last year and has $416 million in balance sheet cash to pull it through. The drop last week brings the market cap down to $4.7 billion and a price-to-sales ratio of just 3.2 times, a giant discount to the valuation multiple it's traded at in the past. Solar and alt energy is about the most unloved industry right now, trading at peak fear, and it won't turn around overnight, but Enphase is going to be there when it does. We've still got 3 of my favorite long-term stocks left, but nation, this need for safer stocks that aren't going to turn your portfolio and your life into a sequel from Friday the 13th comes from a hugely important lesson in my own investing life. Picture this. I'm 5 years out from the Marine Corps. It's 2006 and I'm working my first real job in finance, but I'm also buying up those momentum stocks, the Nvidias of their day, watching them soar higher. And it was beautiful. I mean, I felt like a genius. Then over 4 days in May, right around Mother's Day, everything collapsed. I lost all those profits and then some in a heartbeat. The worst part, though, wasn't the money. Hell, I was a broke-ass 29-year-old without much money to invest anyway. No, the worst part was that I almost quit investing. After that 2006 mini crash, what felt like so much work investing only to see it all wiped out, I didn't think I could stomach that kind of whiplash anymore. And I know that's how a lot of you out there feel, whipsawed by the stock market, chasing that next hot stock, and then watching the rug get pulled out from under you. But that crash rewired how I invest. It wasn't about quitting stocks, it was about quitting the wrong strategy. Along with studying how the market works and eventually working as an analyst, I went from chasing hype stocks to building long-term focus with the stocks that I knew would make me money and wouldn't wipe it out in a tweet. I know it's a long aside and I want to get to those next stocks to watch, but nation, do not give up when the stocks put you on a roller coaster. Stick with me here, learn how to pick better stocks and stocks you can count on. And next here is a stock in my favorite long-term theme, cybersecurity, and market leader CrowdStrike Holdings, ticker CRWD. The market for cybersecurity is forecast to grow at a 12% annual pace to $377 billion according to research by IDC, and This is the only corporate spending that just cannot be cut in any economy. This bottom line here shows the percentage of IT spending that goes to cybersecurity, and you can see not only does it not go down, but it is slowly creeping higher. Cyber attacks hit 72% of corporations last year, and with the average data breach costing $5 million, companies cannot afford to cut their cybersecurity spending. But then that overall growth masks a huge difference between the segments of cybersecurity, and it's this level of deeper research that I've been focusing on here in the channel. Instead of just a scattershot across cybersecurity companies, we want to target those with strength in the faster growing segments like cloud, endpoint security, and AI. So here, not only does CrowdStrike lead in several of the industry segments like endpoint security and SIEM, it is building the future of AI cybersecurity that ties all the segments together with its Charlotte AI, an agentic cybersecurity assistant that's redefining how security operations work. Unlike traditional AI tools that require prompts and manual interpretation, Charlotte operates like a teammate, automating investigations, generating scripts, and making recommendations in natural language. That means faster threat response, lower workloads, and a more scalable defense. The company's XDR platform, Falcon, is now the most adopted in the industry, with 60% of customers using 5 or more modules, nearly half using 6 or more, a sign of deep customer entrenchment. So at this point, CrowdStrike is unstoppable. The company captures over 1 trillion security events per day, fueling both Charlotte's AI learning and that real-time threat graph that underpins its detection capabilities. In an environment where every vendor is trying to bolt AI onto its legacy tools, CrowdStrike has built its platform around it. That structural advantage in data automation and agentic AI makes it not just a leader, but a category definer in the next-gen cybersecurity. Here we see CrowdStrike has the second highest growth among the cybersecurity stocks I follow, and while high spending is limiting profitability and the shares are relatively expensive here, I want to invest in that leadership. But here that bigger picture growth means I'm not ignoring these other stocks either. I also have positions in Palo Alto and Zscaler for that broader exposure to that cybersecurity theme. Now, this next stock is up almost 50% since recommending it, and has a lot more to go, but one thing we haven't covered in this video, another of my favorites for long-term growth, is the next evolution in AI with robotics. Make sure you watch the video in the corner here next for the 5 stocks changing the world with that robotic technology. The Grayscale Ethereum Trust, ticker ETH, is up 49% since highlighting it just last month, and despite that run, this one can still be one of your reliable long-term winners. That's because, believe it or not, folks, we are moving into a tokenized world, a world of digitized finance, and Ethereum is the backbone of that world. But this isn't as crazy as that might sound. Tokenizing an asset just means breaking up the ownership into pieces and selling rights to that through cryptocurrencies. And if that sounds just a little familiar, it's because it's almost identical to the way that stocks work. When you buy a share of stock, you're buying a piece ownership of a company represented by a digital line item with your broker. Recent legislation like the Genius Act and other bills is moving us closer to that era of tokenization, and everyone is getting involved here. Robinhood is using Ethereum's Layer 2 network Arbitrum to launch its tokenized US stocks. Deutsche Bank announced its tokenized platform would be built on Ethereum. And Goldman Sachs is partnering with Bank of New York to tokenize the money market, a $7 trillion market. And Ethereum is the backbone of that stablecoin market and the way tokenization will work. Think of it like the highway on which stablecoins like USDC and Tether travel. Ethereum is the infrastructure, the digital road that allows those tokenizations to work. More than 27% of Circle's USDC supply and 15% of Tether is on Ethereum, and all the leading Layer 2 systems settle on Ethereum. Now, I know all that crypto jargon can get confusing, but just understand here, Ethereum is tokenization, and we're not going to see that growth without it. And while you can buy Ethereum directly or through futures, I like the ETF because it trades like a stock and has options available, which means I can fine-tune my positions, including the call spread strategy I suggested in that earlier video, now worth 154% return in less than a month. Look for the link in the description and get your free one-on-one portfolio analysis. Make sure your stocks are right for your goals. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.